Hello and good morning. 10 years of excellence, 10 years of brilliance, and 10 years of humble service to the financial markets. Almus completes 10 years, folks, and it brings nothing but joy to continue being a part of this undeniably valuable journey over the decade. And I'd like to also hear from you guys if you have something really good to tell about your good experiences with Almus over the decade. So please, folks, feel free to pour in with some good words towards us. Coming back to the updates on the financial markets, as mentioned in one of our earlier updates, we mentioned you cannot fight the momentum moves in USDINR. And that precisely has what transpired yesterday. But the movement was on the higher side of the dollar. Fall of 2% in 10 days was by all means excessive when you consider that many of the challenges for rupee still remains negative, which traders more or less ignore. But even the hardcore rupee bull would have been self-doubting when trade deficit's preliminary number showed an all-time high of USD 31 billion. And that is almost double of even the pre-COVID month-on-month number. Quite a significant number, folks. Most importantly, for us, that was at 78.50, a level of many importers who were left in the lurch in the last couple of months by the swift one weakness in the rupee, and they jumped at it. What next after a 38.2% recovery in the pair? Feel the market may now see more sober moves looking on the ongoing fundamentals, even though the opening move does not seem to be a bit on the sobering side. RBI's meeting outcome tomorrow should be watched more for their outlook on inflation and growth, as market participants talk about a possible rate hike of 25 or 50 basis points. One definite boost up was the positive turn in the FII flows this month, about about 800 million in 3 days, after posting a plus in July after 9 months of negative. Expect markets to remain in a range of 78.8 to 79.40 or 45 till tomorrow, having to assess which factor will eventually have more positive or negative turn. On the global markets front, we have an event which was quite closely tracked, Nancy Pelosi leaving Taiwan, and the markets have almost forgotten that she ever came there. Equity markets have recovered their poise, a tech sector rally seeing Nasdaq close to its highest level since May 4, and S&P a 1.6% rally. As for the yield curves, we see short-term yields higher, and the gap between the short term and the 10-year widens, as the yield curve conversion is at 36 basis points. Actually, the markets have been ignoring the comments from Fed officials who continue to deny any slowdown in Fed rate rises, with most calling for 50% hike, 0.5% hike in September. Perhaps it is too far from now, and we will have to digest a lot before the decision. Hence, the markets can be a bit slower. We have MPC of UK with markets mostly expecting a 0.5% hike, and BOE chief already having hinted it as well. Overall, the risk sentiment appears to be supported, but now the data and particularly Friday will have more important influence as per the actions by our central bank. Now, this was more on the fundamental side. We also have a bit of a crisper insight on financial markets with the technical studies, and I'd like Nikunj for some more updates on the technical side.
Sure, Shikhar. Thanks a lot. So welcome to the graphical representation of financial markets known as technical analysis. So it has been said that whenever there is too much of noise in the market, just keep calm and follow your charts. Technical analysis will give you a mirror effect of what all is happening in the financial markets. So I'll just start with dollar index. Dollar index day before yesterday, we have seen a good up move till 107, and right now it is trading at 106.40. As we have mentioned in our earlier technical session, that it is just the corrective dip which we are witnessing right now, but all in all, dollar index is still expected to move higher. It has to close below 103, 102 levels for it to say that now it is the point of reversal. As of now, we can say that once it moves about 107.50, possibility of again it making a new high towards 109 plus is still there. So this was dollar index, and definitely dollar index will impact all emerging market currencies and other majors against dollar. So we have to closely monitor dollar index. Moving on to other majors, that is euro dollar. Euro dollar, we feel that it will be in a broader range of 1.0280 to 1.0110, and right now it is trading at 1.0160. So any dip near 1.0120 can be bought for imports, and on the higher side 1.0270 can be sold for exports. Same is with GBP. GBP right now at 1.2150. On the lower side, 1.2050 can be seen as a level to hedge for imports, and on the higher side, 1.2250 is a good level to go short. Now I'll move to gold. Gold, we have seen, and earlier also we had mentioned that 1670 is a very, very good level, and from there on we have seen a good rally towards 1780, 1790 levels. Right now it is at 1770, and we feel that soon it will close above 1810 and possibly then towards plus 1900 levels. Again, if dollar gold dips around 1725, that would be another level to enter from the long side. This time I'll even cover index, that is Indian Equity Index Nifty, which is rallying since last 2 weeks. So we believe that this has some correlation with USDINR, but looking at yesterday's move, it feels that the correlation is not much there. Right now it is at 17,485, and we believe that it may touch 17,900, 18,000 plus levels in next week. Any supports near 17,000 figure levels can be bought and can be seen as an opportunity to go long. Now I'll come to USDINR. Yesterday we saw a good up move in USDINR after we saw a 5 days of dip till 78.50. We have seen RBI entering at 78.50, and the news which came day before yesterday has just reversed dollar rupee, and right now it is trading at 79.36. Today any dips to 79.10 can be bought, and on the higher side I think it should not go above 79.50, but exporters can wait for better levels and imports can be covered near 79.10 levels. So this is it from my side.
Okay, wonderful, Nikunj, quite crisp as usual. And folks, this has been our update for the day, and we'd like to come up tomorrow again, but meanwhile Almus looks to be in some of celebratory mood. We completed a decade of service. Thank you for your excellent companionship, your partnership in our journey over the decade, and we look forward to another glorious decade of service to all our prestigious clients as well as associates. That's it for today. Thank you so much for listening.